Hello friends, this is Raman Gill with your weekly Forex market analysis for May 29th, 2016. Just a quick disclaimer before we get started. This is for educational purposes only. If you have questions about your individual investing needs, I recommend you talk to your investment advisor. As usual, we'll get started with the economic calendar, then we'll take a look at commitment of traders data to see how the big fund managers and speculators are positioned, and finally we'll get into technical analysis. We'll start off with the Forex Factory calendar here. Very busy week this week in terms of a lot of economic indicators, leading indicators coming out. So this should be interesting. We start the week off by taking a look at CPI numbers out of the Eurozone. We have German preliminary CPI numbers, Spanish flash CPI number, and then we get into Canadian dollar. We have trade balance or current account, which is the difference in the amount of exports versus imports. And this number will be important because it'll speak to the state of the economy for Canada. We have seen the oil prices going up and down. And with the big drop in oil prices, the Canadian economy has been impacted a lot because it is dependent on oil. So this will be an important number for Canadian dollar. It is a bank holiday in the US, so the New York session should be fairly slow tomorrow. Going into the Asian session here, we have for New Zealand dollar, we have ANZ business confidence number, and then building approvals month over month number for Australian dollar, and also the current account, which is the difference in exports versus imports. So this will be an important number for Australia as well. Going into Tuesday, here we have German retail sales number for Eurozone, German unemployment number, M3 money supply. All of these numbers are important because they tell us about the state of the economy. We also have the CPI flash estimate and core CPI flash estimate. The inflation numbers are very important because these tie into the monetary policy for the country. We also have GDP number for Canadian dollar. Bank of Canada did not cut the interest rate for the Canadian dollar, and if the numbers come out negative for Canada, it puts more pressure on Bank of Canada to actually cut interest rates. So these numbers will be important for Canada. We also have core PCE price index and personal spending number for US, and then we have Chicago PMI and CB consumer confidence number for US here as well, and then manufacturing PMI numbers for China, GDP number for Australia, and cakes and manufacturing PMI number for China again. So these Chinese numbers actually will have an impact on the countries that do a lot of business with China. For example, Australia, New Zealand number, these currencies will be impacted by how the Chinese number come out. And then on Wednesday, we have Spanish manufacturing PMI numbers. The PMI numbers are important because these are leading indicators for how the retail sales numbers will come out. So we'll pay attention to these. We also have Italian, French, German, and then final manufacturing PMI number for the Eurozone. We have manufacturing PMI number for British pound. British pound has been very strong based on the polls that are coming out. This is a sentiment driven move because we have the polls showing that the camp for staying within the Eurozone is stronger compared to the camp that says leave Eurozone. So the Brexit concerns or the polls around Brexit are driving the strength in the British pound. So if the numbers start coming out negative, it will have impact on the strength of the pound. So it's an important number to keep in mind. We also have, again, more PMI numbers here. ISM manufacturing PMI number for the US. Any of the US economic numbers coming out here into June and July will be important because market is looking at these numbers to gauge whether the Fed will raise interest rates, and all these numbers will tie into that decision. So market will be closely watching any of the US related numbers. We also have GDT price index, which is the dairy prices. Dairy is one of the biggest exports for New Zealand, so this is important for the New Zealand dollar. We have retail sales for Australian dollar and trade balance for Australian dollar. Again, important numbers for the Australian dollar here. Going into Thursday, we have Eurozone Italian bank holiday, but then we have construction PMI numbers for the British pound. And very important here, we have OPEC meetings all day. This is the meeting for the 13 OPEC countries. They meet and they discuss market conditions, supply, and other things related to oil. This will be important because we'll need to look for any rumors, any comments coming out of these meetings, because the rumors or comments can drive the oil price. So this is something to pay attention to. We also have something very important for euro here, which is the eurozone minimum bid rate. So this is from ECB, European Central Bank. This is the interest rate for eurozone. We're not expecting any change in the interest rate. However, any of the comments from Draghi, which come out in ECB press conference at 8:30 a.m. Eastern, these can have a big impact on the markets. Last few times we have seen markets has taken Draghi's comments as being bullish for eurozone. So anytime we have ECB press conference, it's important to not trade into that because the markets tend to become very volatile during that time. So something very important to pay attention to. We also have ADP non-farm employment change number for the US on the same day, and unemployment claims for the US. And then we have crude oil inventories, which again could have an impact on oil. So we may see a lot of oil related volatility in the market, as well as volatility for the US dollar and the euro on Thursday. So if you're trading, make sure you keep this in mind. And then on Friday, we have more PMI numbers from the Eurozone. We have services PMI number for British pound, and then trade balance number out of Canada, and average hourly earnings. And very, very important here is the non-farm employment change. When this number comes out, it's a volatile time in the market, so make sure you're aware of that. And then finally, we have trade balance, final services PMI, and ISM non-manufacturing PMI number for the US. So a ton of news that speaks to the state of the economy for multiple different countries here. So be mindful of all the news that's coming out this week. Let's move on to our commitment of traders data now. The reason we look at commitment of traders data is to understand how the bigger players are positioned in the market, so we're not trading against them, we're not giving our money to them. Looking at Euro COT data here, we see that there has been an increase in Euro short positions. If you take a look at this green line here, we see leverage money positions have increased from negative 22,542 to they have more than doubled to 48,834. So that's quite an increase in the Eurozone short positions. This would be bearish for the euro. Looking at the pound US dollar positions here, we see a drop in the pound short positions. It is fairly neutral. It's a small drop. We went from 7,957 short positions to 4,738 short positions. So not a big drop. However, they have been cut in half. So we do need to keep that in mind. So this will be neutral to bullish for the British pound. Looking at the Aussie US dollar here, over the earlier part of the year here, we have been seeing an increase in the long positions for Australian dollar, which was bullish for Australian dollar, and then last few weeks we've been seeing a decline in Aussie long positions, and now it has come down quite a bit. We have gone from the high of 61,000 long positions to the current point where we only have 16,440 long positions. So this is declining from last week to this week. We have seen a drop. As a result, this is bearish for Australian dollar. Similarly here for New Zealand US dollar, we've been seeing a drop in long positions as well. We've gone from 11,000 long positions to 9,000, approximately 9,000 long positions. So this is a decrease in the long positions, which would be bearish for New Zealand dollar. For Canadian dollar or dollar CAD here, we have seen the leverage money long positions have actually decreased a bit. We've gone from 14,823 last week to 13,053. So not a big drop in the long positions. However, it is a drop, which could mean that we may see Canadian dollar pullback, which in turn would push the dollar CAD up. However, with this, we do need to keep in mind the price of oil. However, as per the COT positions, there is a slight drop in Canadian dollar positions, which would mean bullish for dollar CAD. Let's move on to the charts now. We'll start off by taking a look at Euro US dollar weekly chart. We have seen 4 weeks of decline in the euro here, and this week the price closed quite bearish here, very strong bearish candle to the downside. Looking at the daily chart here, we do see a very strong close into the week here. Euro has dropped, and this has to do with the Yellen speech as well. We heard Yellen speak on Friday, and she also supported the view that came out in FOMC meeting minutes where the Fed is open to raising interest rates in the year, and this could be as soon as June. And because of that, we saw US dollar strengthen, and as a result, euro has dropped against the US. For the outlook for this week, we will look for a further move to the downside. However, we could see a pullback before the market goes down. In terms of the pullback, we may see a pullback into 1180 level here. The price did not quite close below the 1100 level. It's still holding above the 1100 level. So we could see a pullback into 1180 here area here, or even all the way into 1240. In terms of targets, we are looking at 1050. The first target will be 1050 to the downside, and then further we are looking into 109.80, this support and resistance level. So this will be a nice target for the euro. Overall, the outlook is bearish for this week. Pound US dollar weekly, we saw the pound has closed bullish here for the week. And taking a look at the daily here, so we do have a couple of red candles here. However, price hasn't broken down below this 146 level. So from here on, there are a couple of different scenarios. We could see a pushback into this 47.38 level, and if this breaks, we could go all the way into 48.17 or 48.20 level, which is this support and resistance up here. Or if we break below this 14600 level and we see a trend line break here, our next target will be 144.40 here. So this will be important support and resistance level. And if the price breaks through this level, we are looking at next target of 4300, 14300, which will be this to the downside. For New Zealand US dollar here, we saw another down week, and especially to do with the dollar strength here. New Zealand dollar was trading in a range here. However, it has been following this downtrend line and hasn't managed to break above that. And finally, it has closed below this 67.20 level. At this point, we would be looking for a further move to the downside. However, we can see the price pull back into this trend line, even as high as 67.50 level, and then do a drop. So the targets will be 66.60 level, this one right here, and then 6600 level, and it could go to 65.80 level here as well. So in terms of the targets, our outlook is bearish. We would look for a pullback and a drop. Another thing to keep in mind for this week, and this is to do with all the pairs, is that we have month end on Tuesday. Bear that in mind. With the month end, we may see opposite moves to our outlook, and a lot of time that has to do with profit taking. So everybody who has been short in all these positions, they may be looking to close the month out by booking some profits. As a result, the US dollar may go down, and we may see all the other currencies go up because it has been very positive for the US dollar. So we may see some opposite moves in all of these currencies. So do keep that in mind. For Aussie US dollar here, this is the fifth week that we have seen to the downside. However, the candle that we have here is not a very strong bearish candle. And as we can see in terms of the volume here, we've been seeing a decrease in the red volume, which means that this move may be coming to an end, or we may see a bit of a pullback from here. Looking at the daily chart here, we have seen the Aussie trade in this range for the entire week, and at this point would be looking for a break of the range. So if the price breaks to the upside and trades above the 72.50 level, then we're looking for the price to move to the next level, which will be 7300, and then further up potentially into 73.50 area here. So if the price breaks above 72.50, we are looking for the target of 73.50. However, if the price breaks down through the 71.50 area here and closes below 71.50, we may be looking for a further move into this 70 area. So both of these scenarios could come to play. So we'll just have to keep an eye to see which way the price breaks.